Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 10th of June. I'm Daniel Lam, your host for the podcast. Some chess friend was very happy to have bought Japanese equities in his mandatory retirement plan earlier this year. He asked me if I got any Japanese or Korean equities in my plan. Unfortunately, I have not, but some of the friends did get involved and have been very glad with their decisions. Now, Korea's record May exports confirm the strong momentum of the AI and semiconductor cycle and make current Korean won weakness an attractive accumulation opportunity. So Korea's exports reach $88 billion, setting a new monthly record, growing 53% year-on-year and exceeding the consensus at 49%. Now the surge continues to be driven by a sharp increase in semiconductor demand and AI capex globally, with semiconductor exports up an amazing 169% year-on-year. Memory chip prices remain near record highs, and capex projections is still going strong, suggesting that the Korean export revenue windfall is not likely to be reversing in the near term. Now, if I can only show you the exports graph on this podcast, that would have been extremely striking. But essentially, the pickup in exports since the final months of 2025 was pretty much entirely due to the rise in semiconductor exports. But this boom in the semiconductor space is also showing signs of spreading into the broader economy, with exports in the non-semiconductor sector picking up to 16% year-on-year, and manufacturing PMI for May rising to 54.8, the highest level in over 5 years. So this bodes well with the broadening out thesis that we've been talking about for global equities. However, despite this export strength, the Korean won continues to be trading near all-time lows. The won weakness is driven by large portfolio outflows from Korean investors, particularly into the US equity market. But the gap is not sustainable, and capital outflows will moderate as the domestic market becomes more attractive and policymakers address the persistent currency weakness. Now, the currently weak levels in the won, therefore, represent an attractive accumulation opportunity for the long-term allocators. After such a strong run, it will be tough to be chasing Korean equities at these levels, especially with the near-term risk in AI and US equities, due to factors such as public market capital raising. But we remain long-term bulls on the AI trend, and this underpins the long-term uptrend in Korean equities. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.